Transitioning from cash to accrual accounting involves a comprehensive overhaul of both internal software and the governing regulatory frameworks. Governments worldwide are systematically abandoning outdated cash ledgers to embrace the accrual basis of accounting, aiming for better transparency. But during this transition, auditors and financial managers often rely on older working papers, previous year's templates, or outdated training manuals. And those legacy materials frequently direct practitioners to a foundational set of rules, International Public Sector Accounting Standard, or IPSAS 6. Originally, IPSAS 6 provided the complete framework for preparing consolidated and separate financial statements. If you are an auditor operating in an Arabic-speaking jurisdiction today, your first instinct is to pull the latest authorized handbook to verify those consolidation requirements. This is the 2022 Arabic edition of the IPSAS Handbook, Volume 2. It serves as the definitive reference material for these regions. A practitioner will naturally open this book, expecting to find the consolidation rules neatly packaged under Standard Number 6 in the index. Here is the official Arabic table of contents. Scanning the right margin, you follow the numerical sequence of enforceable rules. The list shows the progression through higher numbers, like IPSAS 28, 29, 30, up through 33. But look for IPSAS 6. It is completely absent. This omission is not a printing error by the local publisher. The International Public Sector Accounting Standards Board systematically withdrew IPSAS 6, rendering it defunct. Because audit opinions must reflect the standards currently in issue, citing a withdrawn standard creates a fundamental reporting mismatch. It signals to stakeholders that the audit framework being applied does not match the actual regulatory requirements for the period. If public sector entities still need to consolidate their financial data, where did the rules actually go? The legacy framework had a structural flaw. Combining the accounting rules for a single standalone entity and a massive government group into one unified document created friction for practitioners trying to isolate specific requirements. Instead of issuing another round of amendments, the board decided to replace the standard entirely. Here is how that original unified structure looked: a single block of regulations under IPSAS 6. This monolithic structure remained in place until the regulatory shift became mandatory for reporting periods beginning on or after January 1, 2017. At that point, the old rules were divided into two specialized frameworks. The first of these is IPSAS 34, Separate Financial Statements. IPSAS 34 isolates the specific accounting mechanics required when an individual entity reports strictly on its own standalone operations, ignoring the wider group. The second pillar is IPSAS 35, Consolidated Financial Statements. IPSAS 35 dictates the complex elimination and aggregation rules necessary for assessing the financial position of an entire economic group. This two-pronged approach mirrors the IFRS model used by major corporations, where separate and consolidated reporting are handled as distinct accounting problems. It adopts a proven structure for managing the friction between individual entity data and group-wide eliminations. The consolidation rules did not vanish. They evolved into a sharper two-pronged framework designed to accurately map complex modern government structures. This presents a logistical challenge for international practitioners. When a major standard is suddenly retired, how do non-English jurisdictions verify the change? It is reasonable for an auditor to wonder if a missing standard might simply be a localized printing error or a mistake in the translated text. We can dispel those doubts by looking at the publication details page of the Arabic Handbook. The deposit information registered with the Jordanian National Library proves this is a legally recorded formal publication. The International Federation of Accountants, or IFAC, maintains strict global version control over these documents. The copyright and translation page verifies the chain of authority from IFAC to the publisher. The IFAC seal confirms the document's legitimacy. It also details the role of the International Arab Society of Certified Accountants, responsible for executing the translation. IASCA operates under explicit mandates to ensure absolute structural alignment with the English master texts. They do not add or remove standards independently. Practitioners can rely on these authorized translations as structural mirrors of the original requirements. When a standard is absent from the Arabic volume, it confirms that the standard has been retired globally, ensuring consistency across different reporting jurisdictions. Let's bring this back to the daily operational reality of a public sector financial manager. The need for consolidation is triggered by a specific concept, the economic entity, or al-munsha'a al-iqtisadiyya in Arabic. This diagram represents a typical government structure. At the center, we have a controlling entity, like a federal ministry. Connected to it are various controlled entities, which could be specific agencies or state-owned enterprises. To evaluate the financial health of this entire interconnected cluster as a single unit, the auditor must strictly apply IPSAS 35. However, if the goal is to evaluate only the central ministry's standalone performance, IPSAS 34 is the correct framework. This distinction is especially important for distinct government agencies or developing nations adopting accrual accounting for the very first time. Returning to the table of contents, we can find the specific standard that governs this initial transition process. IPSAS 33, First-Time Adoption of Accrual Basis IPSAS, provides the temporary rules for building initial balance sheets and managing the transition period. First-time adopters must ensure their initial chart of accounts mapping directly utilizes the bifurcated 34 and 35 structure, completely bypassing the legacy rules. Relying on the most current 2022 and 2025 handbooks is the only reliable way to build a compliant financial roadmap. True international financial compliance depends on two factors: the rigorous application of current rules and the precise identification of legacy standards that are no longer valid.